It is my honor and privilege to introduce Stephen Meade. Stephen Meade, Chairman and founder of Big Bamboo LLC, a holding company that accelerates ideas into formation of companies. He is passionate about creating world-changing companies as a mentor and executive. As CEO of multiple public companies and advisor with dozens of startups, he has demonstrated the ability to catapult an idea from pure concept to the creation of a thriving business. He is also, his signature, the Bullseye Belief System, helped to create, incubate, and architect different companies spanning the development of the internet, e-commerce, payment processing, and blockchain technology. He's also the founder of MonteroPro.io, a global barter platform, and Mangomo, social media photo sharing tool. And thanks for your service, a nonprofit supporting first responders, law enforcement, and military. MonteroPro.io competed in and won the Silicon Valley D10E Global ICO contest, which to date was the largest ICO competition in the world, featuring 32 companies. He also hosts the Bullseye Guide podcast featuring entrepreneurs, entertainers, authors, and changemakers around the world. With that said, Mr. Stephen Meade, we warmly welcome you to share your wisdom in blockchain technology and cryptocurrencies.
Tej, thank you so much, Dr. Hari.
Thank you.
Praveen, Swami, I appreciate the opportunity. And and Kumar is always clapping. Thank you, Kumar. I appreciate that.
Thank you, Stephen.
Even the introduction makes it sound like I do a lot of things. I want to be very clear. I'm focused on how to build companies. I can only drive one car at a time, but I'm good at driving cars and putting them in a garage until I find somebody else. So many of these projects we end up creating will build something far enough along for somebody else to drive. Let me go through just the arc of entrepreneurship, a little on my background. I think it adds relevance, and then I'd love to share the content with you guys. I joke with people that I'm a lifelong entrepreneur, never had a job. I'm unhireable. And when I grew up, I didn't really know why. I was working a lot. I was trying to figure things out. And my story is I moved around a lot. My mom and dad were divorced when I was 3 years old. So I never knew my real dad. I went to 13 schools through 8th grade, which means you develop fast relationships, but not deep relationships. So it was a lot of learning and moving in different cultures. And I grew up sort of coming up with ideas. I've never done drugs or smoked cigarettes. I was always afraid to drink. And about 10 years ago, I learned that my real father died when he was 60 years old. And it was a bit of a shock. But then I learned his twin brother died at age 57. And I thought, wow, medically, I better find out what's wrong. I learned my real dad was an alcoholic and they both died of liver disease. And this epiphany came on. I'm like, aha. I'm an addict, but my addiction manifested into work. And I was always accused of being a workaholic, and I never understood that. And then I at least understood. So as I moved forward, I started retail stores in college. I wrote 3 books when I was 20 and had an infomercial called Give Yourself Credit. The arc for me really started when I was 22. I went to work at Travelers Group, selling insurance, mutual funds, and mortgages. And over the span of 6.5 years, I read 357 books. That's basically 1 book per week. And I dissected the elements of the book and I learned a new skill, and it's called stacking. I learned a new skill every week and then translated that to 8,000 salespeople over those 6.5 or 7 years. And it was through the course of that, I developed you can see it over my shoulder. Thank you, Praveen. It's called a Bullseye Belief System. And what I really learned is from all of these great masters and books and thousands of years of training, it comes down to learning how to be specific, how to target and focus and figure out exactly what you want, because people can't help you if you don't know what you need. What you do is irrelevant. What you need is important. And so I learned that early on, and I'll fast forward now. 96, I started an e-commerce company. I became the first master merchant in the world for credit card processing. And the reason I know that is Visa shut me down in August and said the internet will never work. What you're doing is illegal. And I went to Visa, again, learning my skill set in sales. I didn't convince them I was an internet company and they were wrong. I used a little psychological jujitsu. I convinced them that I was an 800 service, but the internet was just another form of what's called card not present, the ability to take a credit card without that card being present. And Visa changed the laws in August to make me the first master merchant in the world for credit card processing. Took that company public in the 99. It's what went on to become PayPal. And so when I joke that I start these companies around ideas, I don't know how to program or code. I have ideas and I know how to execute them. And as we move forward, this concept of blockchain and Bitcoin really started bubbling up 2017, 2018. And I started a company 2018 called Moneta Pro. And it's the same idea that I had in the year 2000 for something called 2Exchange. And I just didn't know how to explain it properly around creating a global currency. And so this migration and movement into blockchain and Bitcoin and the things I'm going to talk about here has been this sort of lifelong progression. And the joke I will tell you guys, I like to tell a joke, and my jokes aren't always funny. This one is less funny and more introspective. This concept of Bitcoin has come into the public vernacular and it's gone up very high, and I'm going to explain that. But a lot of times I get asked the question, oh, Stephen, do you regret not buying Bitcoin earlier? And I look at him and I say, of course I don't regret not buying Bitcoin earlier. I bought it in 2012. I bought 1,000 Bitcoin at $3. $3,000, 1,000 Bitcoin. I don't regret not buying it earlier, but I sure regret selling it at $5.50. So my regret, I don't live with regret. It was learning, because to me, Bitcoin served the purpose of a tradable asset. And that's what I'm going to talk about. My background in it allows me to understand technology, understand microcaps, financing. Through the course of my career, I've actually had 3 public companies, what are called microcap, small cap. Sometimes it's pejoratively called penny stocks or pink sheets, but in the US, we have OTC microcaps, which are $50 to $400 million size companies. Then you have NASDAQ, then you have the New York Stock Exchange. And that's the levels we participate in the US. I'm going to talk about how blockchain and crypto and Bitcoin all fit within this ecosystem. And with that, I'll jump in. The presentation will go quick. Hopefully we'll have some time for questions. The topic is called Unblocking the Blockchain. And what I'm saying is, I'm not going to teach you how the blockchain works. I technically don't know how it works, but I'm going to teach you how it works for you. And here's what I mean. And Swami, if we were in the ability to do it perfectly in a world where we were in person, I would ask you, how many of you know how the internet works? Raise my hand. Those of you that are on screen, Swami raises his hand for me. We all know how the internet works. Do we really? This is the internet. That's the code that runs the internet. That's technically how the internet works. I've built internet companies. I don't know how it works. I don't care how it works. I know how the internet works for me. How does the internet work for me? There's my website. The internet to me is a tool that enables me to do something better. A website is an efficiency that uses the internet. And the reason I start with that is blockchain to me, people go, oh, are you a blockchain company? That's like looking at Swami and ask him if he's an internet company because he has a website. If you have a website, it doesn't make you an internet company. You may be, a manufacturing or a real estate or a professor at a university with a website. The internet enabled blogging, virtual technology, medicine, ATMs, networks. Blockchain is not an industry. It's an enabler. And if we can start with that, then it becomes much easier when I say, I think blockchain will be bigger than the internet. And again, people who may not understand, they go, oh, so Bitcoin. I know blockchain. And the way I talk about blockchain is every one of you, if you looked at your existing company or your existing industry and looked at how the internet impacted your industry, It may have displaced an existing process. We don't call people on the phone as much anymore. We have internet chat. And then internet chat's now replaced by AI chat. Now you're not even chatting with the real person, you're chatting with the computer. Blockchain's going to enable these efficiencies of process across every industry. And it does things the internet can't do, and it does it better. How it works technically, I'm not going to get into because I don't know how it works, but I can figure out use cases of what makes the blockchain efficient. And then to me, it's kind of fun, especially if we talk about Bitcoin and cryptocurrencies and some of these things. Before the internet, and hopefully you will all laugh, before the internet, there was no internet. Think about that for a moment. Before the internet, there was no internet. Well, what that means is, again, the internet enabled communication, ATMs, disruptive industries. We can think that an Uber is disruptive for the taxi industry. It wasn't really disruptive. The taxi industry had every opportunity to put a location service on the phone, but they didn't. So it disrupted it, but it also displaced that industry by providing a better service, doing something better. And that's how I want you to look at blockchain. Don't try to figure out technically, unless you're going to program and code, the whole concept of distributed networks and a diversified platform and a communicate. I have technical people talk to me that I don't know what they're talking about, and I've built companies they haven't. So again, I want to take the mystery out of blockchain to look at it as a business tool or a process, and then figure out how that particular technology can make it easier. And with that, I've got distinctions between what I call Bitcoin, blockchain, and cryptocurrency. And I'm going to talk about Bitcoin for a moment. Bitcoin to me initially was a glorified gift card. Back when I bought it in 2012, I tried to figure it out. And to me, nobody could explain it. I have a very good friend of mine, Brock Pierce. Brock's the one who got me into Bitcoin in 2012. I helped him get on the Bitcoin Foundation. And Brock would explain it to me. He'd say, oh, Bitcoin's like an apple, but there's only one apple. And if that apple falls off the tree, there's no more apple. And I'm like, okay, how do I get the apple? Like, I don't grow apples. Oh, well, you can mine. And I'm like, I'm not going to mine for something anymore, and I'm going to grow an apple. How do I get the apple? And at the end of the day, he said, oh, you buy it. And I go, well, it's like a gift card. And my point was, I could buy $1,000 gift card at American Express and walk up and down the street, and some people will take the gift card and some people won't. And that was kind of what Bitcoin was like in the day. You could buy it. It was difficult. And some people would accept it, some wouldn't. But it was more to me like a penny stock. If I bought $1,000 on Bitcoin, it might go up and it might go down. And that fluctuation to me was interesting. So again, when I bought Bitcoin early on at $3 and it went to $5.50, I thought, wow, I've made a win. Let's get out. Bitcoin now to me is more like gold. I've evolved my theories on it, and it's very interesting. Bitcoin comparison to gold is very simple in my opinion. A brick of gold, and I used to ask people this, I didn't know, I had to research it. I'd say, oh, how much is a brick of gold? An actual official gold bar, the kind we see on the movies. It was, when I did this, $500,000. Now it's about 600. But think about it for a moment. Very simple. A brick of gold is $500,000. A unit of Bitcoin is 50,000. I could buy a brick of gold. I can buy one Bitcoin. But just like in gold, I can buy a $50 gold coin. I may not be able to buy a brick of gold. I may not be able to fit a brick of gold in my pocket. It's kind of hard to carry a brick of gold, but I could buy a $50 gold coin, and that gold coin goes up and down as the same percentage as the $500,000 brick. So there's some interesting things I'm going to talk about in the democratization of investing, but the Bitcoin pricing, Bitcoin has really exploded. I did a podcast in 2012 when Bitcoin had just crossed 20,000. Again, 20,000 for a unit, just like a unit of gold. And I did the top 10 reasons it will go to 100,000. And one of those reasons is the ability to buy in finite increments. And what that means is you don't have to buy a unit of Bitcoin at $50,000. You can buy $50 or $100 worth. But the person that can only afford $100, if that asset goes up 10 or 15%, that means a lot to the person who could only afford $100. So we've democratized the opportunity to invest. Where Bitcoin, I think, is going to go for a bunch of reasons. The market cap for Bitcoin right now is $1 trillion. Basically, more or less. Anybody wants to be specific on numbers? I'm not specific. I'm in generalities. So my generalities are what I talk about. Don't call me out and go, Bitcoin's 54,000. You don't know what you're talking about. I do know what I'm talking about, but it's easier to talk in round numbers. Bitcoin at 50,000, the market cap is 1 trillion. Gold is about 500,000 for a standardized brick, and the market cap is 10 trillion. If Bitcoin's market cap were to go from 1 trillion to 10 trillion, the correlated price for Bitcoin should go from 50,000 to 500. So this idea around Bitcoin as an investment to me is interesting. But the last point I tell people is don't look at price. Price is irrelevant for Bitcoin. And the reason I say that is if you buy Bitcoin at 50,000 and it goes up 10%, you earn the 10%. If you buy $50, $500 or 5,000, you earn the same percentage. And if it drops, don't worry about it. The point I made, I just did this the other day. Bitcoin went from $60,000 to 54. $6,000 drop. Bloomberg, and any of you can Google it. Bloomberg Bitcoin plummet. And Bloomberg's headlines were Bitcoin plummets. They've used that same headline 9 times in the last 7 years. 9 times, Bitcoin plummets, it's going out. What to me is interesting is 60,000 to 54, that's $6,000 plummet was a 10% drop. Apple is trading at $135. Apple dropped $13 and nobody cares. 135, oh, Apple's down $13. That's 10%. So the press tries to fool and scare us. Apple drops 10% from 135 to $13 drop. Nobody cares because $13 and 6,000 sounds like a mass discrepancy. Percentages are the same. So when you're considering looking at an investment like Bitcoin, again, I'm not here to sell Bitcoin. I don't sell it. I just think it's a fascinating opportunity. Look at the percentage return. And if it drops 6 or 7 or 8%, don't panic because that 6% might be $5,000, but it's 6%. And go look at Apple and Amazon and they drop 5 and 6% all the time and nobody panics. So try and keep that in mind. I'm going to move to a little bit different. That gets a little deeper in crypto. The 3 main ones, Bitcoin, Ethereum, and one called EOS. And I want to describe the differences. Bitcoin to me is a single unit. It's like a unit of gold. It has a few functions, right? But it doesn't do a lot, but neither does gold. People go, oh, well, Bitcoin doesn't have any employees. Bitcoin doesn't make anything. And I look at them and I say, well, how many employees does gold have? Last time I checked, gold doesn't make anything. Oh, well, gold can make an earring. Great. When's the last time you bought gold because it makes an earring? Like, we have to be honest with ourselves. You buy gold because you think it's going to go up. You don't buy gold because it has a function to make earrings. So Bitcoin as a unit has a singular function. Now, the fact that it might be used for payment sometimes, the fact that it might be used as some sort of settlement is interesting, just like gold can sometimes be used for payment and settlement. Bitcoin's not going to be a global currency. It's not going to replace banks. You can't have anything that fluctuates within a banking system. Bitcoin to me is going to perform a function. Ethereum, a little more interesting. Ethereum to me, when it came out, is still acting this way. Ethereum is ETH. It's gone up over 3,000. Ethereum is like a glorified iPhone. When the iPhone came out, the iPhone was kind of cool, but what made the iPhone really cool were the apps. iPhone opened up its system and allowed people to build apps that ran on the iPhone. And the more apps that were on, the more the iPhone got cool. But the more apps that were added on the iPhone, the slower the iPhone became. And eventually they had to upgrade the next version iPhone with the better software. Ethereum, as we watch it, Ethereum's like an iPhone. Ethereum allows people to build applications on top of it. In the iPhone world, it's called apps. In the blockchain world, they're called dApps. It's a distributed application for simplicity. But Ethereum does something completely different than Bitcoin. Ethereum allows you to build on top of a platform or structure and do other things. And the goal and idea with EOS, if it eventually works, was that becomes one payment mechanism within all of the apps on Ethereum. So imagine if you had on your iPhone, and Apple could or should do this. Apple should sell you an Apple coin, and you put $200 or $300 in Apple, and they sit on your money, but they give you one Apple coin that you could use in any of the apps. You wouldn't have to put your credit card in every app. If there were one unified payment across all of the Apple app ecosystems, it would simplify payment and transactions for the users. That's where EOS was trying to go. I don't know where they're going to land, but that was sort of the distinction within the market. And so Bitcoin to me is the great equalizer. 97% of the world's population has never had access to financial instruments. The ability for somebody to sign up at Charles Schwab or E-Trade and buy one share of Amazon at $1,500 is out of the realm for many people. Most companies won't sell you one share. It's difficult to sign up. They don't get the best deals. If we have $1,500 to invest, we're not getting in the pre-IPO of Uber or Plaid or Honest Company. We're the little people that try and invest in the stocks and hope they go up. Bitcoin doesn't matter. Bitcoin doesn't care who you are. Whether you put in $50 or 50 million, you earn the same percentages. And so the ability now for anybody around the world with a cell phone or a computer, but primarily a cell phone, to open a wallet, put money in, buy an asset that can go up or down in value, can easily be transferred or shared or sent to other parties and instantly cash back out, is a democratization that in our lifetime and in the history of man and humanity has never happened. Again, I'm not this Bitcoin maximalist. I don't think Bitcoin's going to be the only winner. I think Bitcoin performs a very interesting function that could democratize investing opportunities around the world to countries like India and Africa and some of these other countries and continents that might not have stable financial systems, maybe didn't have access to stocks and bonds or classic financial instruments. So I think it's going to end up there. Couple things in sort of finishing up. I have a few more. There's a lot of talk around cryptocurrencies. Oh, is Bitcoin going to be a currency? Should banks handle cryptocurrencies? In my opinion, again, I could be wrong. I'm not politically correct. I'm politically direct. If you like it, great. If not, it's okay. I don't take things personally. But the difference is cryptocurrencies are not currencies. To me, they're crypto tokens and they act more like penny stocks. Cryptocurrencies to me in the US and globally, it's like a penny stock. And again, the penny stock market in the United States is what's called the OTC. It's the over-the-counter microcap. The people that play down at the microcap OTC market are speculators, gamblers, risky people. It's somebody who wants to buy a stock at 10 cents and hope it goes to $1. They're buying things because they believe a press release or some personality joined and said, hey, I think this company's going to find gold in Australia. You should get in early. And it can be a manipulated market, but the appreciation in the world of penny stocks and OTCs, it's easier for a penny stock or a microcap, as it's more politely called. It's easier for a microcap stock to go from 10 cents to $1 than it is for Amazon to go from 1,500 to 15,000. Now, where's your risk profile? If you're like, oh, I'm not risky, fine. Buy Amazon because you've heard of it, and it might give you a 5 or 10 or 15% return, but at least it's not risky and you've heard of it. If you want more risk, you trade a different class asset of stock. That's where cryptocurrencies, in my mind, are going to land. They're not designed to be currencies. They're not going to be payment. Bitcoin Dash, Zcash, all these things that are claiming they're currencies, in my opinion, aren't. Cryptocurrencies to me are glorified penny stocks and tradable tokens. Now, some may be converted, but at the end, if you just simplify saying, oh, I buy this here. And one that anybody that wants to look at, there's one called eForce, EFFORCE, launched the WOZX token, the WOZX. It launched at 22 cents. It went to $3.5, $1 billion market cap. It dropped down. It's trading at $1.60. If that was done on a US stock market, like an OTC, they'd be $1 billion company and they're trading on the stock market. It was done as a crypto token and it was traded on HitBTC. It's identical. They're identical in their execution. It's just the terminology is what screwed us up. So wrapping up here, crypto versus blockchain. Blockchain to me is the enabler. Blockchain enables Bitcoin functions. It'll enable smart contracts. It'll do some fun things in music. You'll be able to take music and share it and write a contract that says, oh, if you buy my song, you can share it with 3 people, but that person has to register for my fan club before I unlock it and give it to them for free. So blockchain will enable what are called smart contracts. Smart contracts will let you write rules on assets and things you can't do with the internet. So that's what I mean by blockchain on there. Contracts, food security, banking, there's all kinds of areas. Blockchain as a whole is going to change. Some of these companies in those industries will issue crypto tokens to raise money. It's identical to the US markets. They're just calling it a bunch of different things. And so that's what I look at. The last slide here is the investment side. There's a thing called traditional funding versus what I call direct token offering. Traditional funding in the US, you raise friends and family, you do a Series A, Series B, you get diluted 7 to 10 years before you go public. In the crypto world, you can do a direct token offering, raise money, and have liquidity for your investor in 3 to 5 months, 35 minutes. Blockchain enables an efficiency that the traditional stock markets don't allow. And that's sort of what I was talking about. So this new concept we're working on is called a DTO, a direct token offering, identical to a direct public offering in the US, but finding companies that want to issue tokens and go public on exchanges. We've partnered with an exchange in Dubai called Centurion for people that want to go in the GCC area. And Dubai partners and does a lot of work in India and Africa. So we're going out through Dubai to participate through that whole region. Last thing is there's investment concepts called Toquities, which is part equity, part token, which gives you 2 ways to earn money as an investor. You get equity plus a liquidity token, which is that tradable asset. In the future for me, I think crypto is not going to be a currency. It's going to be a tradable asset. I think crypto as a whole is going to grow, but it's going to grow because people will figure out it's an asset class they may want to invest in for a rate of return. Blockchain's the enabler. Bitcoin's like gold. Crypto's like a penny stock. And that's sort of where I'm going to close it up. Thank you. Praveen, you're on mute, but I can hear Kumar clapping.
Praveen, you're on mute.
Okay, thank you, Mr. Stephen. I was on mute and speaking. Wonderful, wonderful presentation. There are a couple of questions that came in. I do have a question myself. I'm monitoring the YouTube live channel as well for questions. So let's start with the first question. Swami, can you go ahead, please?
Yeah, first of all, Stephen, it was a great insight you have shared. So my question is, people like me who did not invest in Bitcoin, but now you are exciting me to buy. So is it a good time to buy? And can we just buy a portion because you're saying it is $50,000? I don't have $50,000, or I don't have the risk appetite to invest $50,000 into one bar. So what should I do?
It's a great question, Swami, and I have a system that's launching in Dubai on the 25th called the Crypto Concierge to solve the problem that you just asked me. So is it a great time to buy Bitcoin? I would say it depends. Depends, as you said, on your risk profile.
Mm-hmm.
If your risk profile is, hey, I'm looking for something 3, 5, 10 years that I want to hold on to. I'd like something I believe is going to appreciate. It may fluctuate along the way, but long term, Bitcoin, I think, is an amazing buy. If your appetite's a little more aggressive, right, not low risk, but medium risk, there's other crypto tokens out there, which again would be like NASDAQ stocks.
Mm-hmm.
And there's Link and Dash, and there's other ones that are a little more aggressive, bigger return, and fluctuate. And if your appetite is high risk, like mine is, you're going to be off in eForce and Dogecoin and a bunch of things that could go from 10 cents to $5, but might go from 10 cents to zero. My appetite is I'm willing to take that risk because I want high risk, high return, but I didn't put all my money there. I moved portions. I did an asset allocation where some of it is in Bitcoin and some I moved into high risk. So it's a great time to invest if you're looking at it as percentage. Price doesn't matter. Bitcoin's at 50,000. It'll still get to 100 or 200, which as a percentage is a good return. There's other cryptocurrencies that'll go from 10 cents to $1. That's a much bigger, better return than Bitcoin, but a lot more risky. Right. So it's more about your risk appetite. It's not about timing.
Excellent. Thank you, Stephen. I appreciate it. So now I have to adjust my risk profile.
The Crypto Concierge, though, is going to help you with that. You're going to say, here's how much I have to invest. Here's what I want to allocate across my risk profile. How much do I want to put in low risk, medium, or high? And you allocate dollars as a risk profile. And then the exchange platform out of Dubai will allocate that to the crypto tokens, just like a mutual fund.
So Stephen, share that the buy information so we can also share it with the people who are in.
Absolutely.
Thank you. Yeah, thank you. Fantastic answer. The next question comes from Sharada. Please go ahead. You need to unmute yourself. Okay, there you are.
Stephen, my question is, firstly, I wanted to thank you for explaining the democratization of the investment process. I'm curious to know your views on how the process itself is, does it enjoy same kind of checks and balances that the typical stock market system and other, even a dollar or a currency system enjoys right now? How do you?
Yeah, it's a good question, Sharada. So the checks and balances are not necessarily there, but again, that's the reason I started, especially with the US market. The OTC micro cap, the small cap company, any company can go public, any company can run press releases, claim they have a product, promote. The SEC has some oversight on that, but it's more limited. By the time you're a NASDAQ or a New York Stock Exchange, by the time you're going public, you're a 10-year-old company. So again, that risk profile, the ability to do due diligence on a small micro cap company is much more difficult, but it's just like doing a startup, right? If I put $25,000 in as an angel investor in your company, Sharada, I have to trust you and hope you're going to perform. And there's 10 million companies a year in the US created, 94% fail. So my risk of putting money in you at 25,000 as an angel is pretty high. I'm going to lose that money. And I'm stuck in the equity. I don't have any insight. I don't have any control over you. You're a private company. If it's done through the stock market, there's actually a little more guidance for me. The token world right now has no guidance, but I believe it will get there. And I think the world, in my opinion, will go to tokens. I would rather give you $25,000 as an angel and get a token as my equity component or my liquidity, because if the token is successfully traded, I can get my money back. If you're successful and that token has value, I can sell it and get a return as an angel. If I'm in equity, I'm stuck in equity for 3, 5, 7, 10 years if you're successful, or I lose it all anyway. So there are some trade-offs. There's not a lot of oversight on some of these projects, which means you have to do due diligence on the project, the managers, the structure, but that's no different than if you were an angel investor. So again, it goes back to what I was telling Swami, it's risk profile. If your risk profile is low, invest in a bunch of big companies that you know of, but your return is going to be lower. Your risk profile is higher, your risk is higher, your returns are higher, but your due diligence is more difficult.
That's right.
Great insights. Thank you. The next question comes from Dr. Shankaran, who's also the chair of our innovation team.
Hi, Praveen. Thank you so much for letting me ask the question. Hi, great presentation, Stephen. I really enjoyed it. I had a question for you. There is this Bitcoin that you talked about, and there are others such as Ethereum, Dogecoin, etc., touted by the great Elon Musk. Now, what is your take on the main Bitcoin versus others such as Dogecoin? And do you think it'll ever get standardized on one of the Bitcoins, or will all of them coexist?
I think they'll all coexist in some capacity until they don't. And what I mean by that is, if you look at the early days of the internet, Amazon was trading at $7 a share, and everybody thought, not everybody, but many people thought it was going to go bankrupt and go out of business, and nobody would shop online at the internet, and it was all a scam. And Amazon's done quite well. At the same time, there was pets.com and toys.com, which everybody, not everybody, again, many people thought was a dumb idea, and pets.com went out of business. And now 20 years later, chewy.com is a multi-billion-dollar company, which is the same thing pets.com was in 1997 or 98. My point is, some of these, quote, tokens as a tradable asset aren't necessarily currencies. What's getting interesting is a merchant can accept, a merchant that accepts a credit card at a restaurant doesn't really accept a credit card. They have a merchant processor that tells them which credit cards they can accept. So if you're a restaurant, you sign up with a merchant processor, the processor says, oh, Dr. Manon, would you like to accept MasterCard, Visa, American Express, Discover? Okay, here's the fees for each of those. The processors are moving in where now a processor is going to say, Dr. Manon, would you like to accept Bitcoin? Great. Would you like to accept Dogecoin? Would you like to accept Ethereum? And all that's going to happen is, if the merchant processor agrees to accept Bitcoin, this is what PayPal's doing. I was with PayPal in Davos 2020 saying, all you need to do to accept Bitcoin goes into the merchant processor. The processor sells it in a spot conversion to cash and pays the merchant in cash. The merchant's going to put a sign up, we accept Bitcoin. They don't. The processor accepts Bitcoin, converts it to cash, and gets paid. This is where Mark Cuban is sort of in this funny, fancy, interesting gray area that I like. He said, hey, we're going to accept Dogecoin. It's not that Dogecoin's a currency. It's just he knows he could accept Doge and sell it for cash. Cuban tomorrow could say, hey, we're going to accept Apple stock for your Lakers tickets or your Mavericks. If he wanted to accept stock, he could. Somebody wanted to transfer Apple stock to him, he could take stock, sell it, and get paid. So anything can be a currency if somebody else is willing to accept it for payment. Whether they become a standardized currency is a different issue. And so some of these, I think, like Dogecoin is fascinating. It has no purpose. It was created as a joke, but now it's got resonance. What drives it? The same thing that drives a microcap stock. Product, publicity, personality, and maybe profit. There's no profit in Dogecoin. There's certainly personality, and there's certainly publicity. That's driving supply. Demand is here. Demand goes up, supply is here, price goes up. So I think some will make it, some won't, but if you're a merchant, it's not going to matter. If one coin's failing, you just don't accept that coin anymore. But most merchants won't accept it. The processor will. The processor will convert the coin to cash. The merchant gets paid in cash, just like credit cards. Merchants don't technically accept credit cards. The processor does, and then the processor sends the merchant cash. Companies operate on cash. They're not going to operate on cryptocurrencies that fluctuate.
Great answer. I have a follow-on question, Stephen. Now, I know that Tesla cars can be purchased, and Elon Musk says you can buy using Bitcoin. Now, how does Uncle Sam get his share of tax?
From Tesla or from Bitcoin?
No, from Bitcoin exchange.
Well, so this is a more tricky, complicated question. I'm going to say it depends. All right, now let's go in reverse order, Dr. Menon. If Tesla sells the car, whether they accept Bitcoin or bags of grain, the IRS doesn't care. Elon Musk could say, hey, I'm going to accept a container of chickens because he wants to grow a chicken farm to feed his guys out in the middle of the desert with the gigawatt factory. Who cares? IRS says you sold a Tesla, you owe us money. The tax side is on the consumer that used Bitcoin to buy the Tesla. And this is where it gets tricky. If you bought Bitcoin years ago and you've held it in your own private wallet, that would be like buying a stamp. Again, I don't buy stamps, but I'm trying to think. If you bought a stamp years ago for $100 and held it in your safe at your home, and that stamp's now worth $10,000, and you took that stamp to somebody to buy a car, the IRS isn't in that situation because you own a stamp. The IRS doesn't know it has value, and you traded it. If you've owned your Bitcoin, what's called off-chain, you've owned it in your own private wallet, and you send it directly to Tesla, it's hard for the IRS to know what you paid for that Bitcoin and where you got it. If you purchased it on something like Coinbase and you bought your Bitcoin at $10,000 and it appreciated in Coinbase to $60,000 and now you sell it, there's what's called a cost basis. So if your Bitcoin was purchased in some of these exchanges, Bitcoin, Abro, Voyager, Gemini with the Winklevoss, the IRS is going to start taxing you because it appreciated just like a stock. It's not a currency. If you own stock in Schwab or TD Trade, you buy Apple at $100, you sell it at $1,000, that's an appreciation. You buy Bitcoin at 10,000, you sell it at 60, that's an appreciation. If your grandmother gave you stock and somebody else took that stock in a private transaction, the IRS doesn't know how to track it because it wasn't purchased through a custody account where they can track the appreciation. And
Great, thank you, Steve.
It's fascinating at Tesla. Some of the Bitcoin he's holding in treasury because Bitcoin's appreciating faster than his stock is. I'd sell a Tesla all day long for Bitcoin, which is a higher appreciating asset than my corporate stock. That's a brilliant financial move, as long as it goes up. So
thank you very much.
For another asset that you can hold in treasury as a public company, yeah. He's making more money on Bitcoin than he's making selling cars, convert cars all day long to a better performing asset.
Yeah, fantastic insights, Mr. Stephen. I think I had a few questions which also got answered. I know we're out of time, but we'll take one last question, maybe with a quick short answer from Dr. Hari.
Yes, thank you. Thank you, Stephen. Wonderful presentation and a lot of exciting market right now for the cryptocurrencies. But the central banks also coming up with their own coins. For example, the UK is coming up with the Bitcoin, and India is coming up with their own digital currency, and all these governments competing with the good ride of cryptocurrencies to see what they can do to control their own currencies. So what do you think of once the central banks have their own digital currencies, the impact on cryptocurrencies or in that market in general?
It's a good question, Dr. Hart. It's irrelevant. The cryptocurrencies, that's like saying, what does the impact of the dollar in the bank have on the stock market? None, except you use dollars to buy stock. So if you own a CDB, a central digital banknote, if you own a CDBN from the UK and that digital banknote has a value, you might use that value to buy cryptocurrency or use it to buy a car or use it for bill pay. Like the central digital banknote for the banks, in my opinion, Dr. Hari, it performs two functions. One, very simply, if I wire transfer money to you, if I want to send you $50,000 through the bank, I have to go to the bank. I maybe do it on my phone, but I have to go to the bank, fill out paperwork, pay $25, wire transfer money, hope I get it before 2 o'clock. So you might get it tomorrow. You probably won't get it for 2 days because the bank wants to sit on money. They sit on that wire transfer, make money. If I send you $50,000 in Tether, which is a digital dollar, it'll be there in 15 minutes. I don't need anybody's permission. So where the banks are moving for settlement is they're all going to have their own digital, and it's not going to matter. I'm going to have a Wells Fargo account, and I'll have $50,000 in my bank account. I'll convert down to a Wells Fargo token, WFT, that's on Ripple. It's equal to $1. I'll email it to Praveen, who's at Chase. It'll do an atomic swap because they're both equal $1. They're stable. It'll swap to a JP Morgan bank token and sit in Praveen's account. And if he needs cash, it'll convert up to cash. So all of these countries want their own token for digital settlement, which is better than cash, which is fascinating because cash isn't really cash. If I wire transfer, I'm still moving digital money, but it moves through a legacy system versus digital. The conspiracy side, Dr. Hari, and I'll leave you with this, is I think the banks want CDNs so they can exert massive control. If the US moves towards socialized medicine, and I'm not picking one side or the other, I'm saying if the government and the NIH, we talked to the NIH in London about this, if governments move to centralized healthcare, where the government is paying and providing your healthcare, then they have an opportunity or a mandate or an interest in maintaining cost. One of the biggest problems in the US is obesity. Obesity is driven by sugar. Sugar is driven by sugary drinks. Bloomberg, the mayor in New York years ago, tried to limit your purchase of sugary drinks at 7-Eleven, said you can't buy a big gulp. And people went, well, screw you, I'll just buy 2 mini gulps. If all money's digital, the government can control where you spend your dollars. If your money goes from your employer into your account, and it's all on a debit card, whether it's a digital dollar or debit card, if they controlled money through your debit card and you went to swipe it at 7-Eleven to buy a big gulp, the government can control your purchasing if everything's digital. Not saying they will, but that's a very frightening premise around control of actions upon a population. Where do you travel? Can you travel? Can you be out late at night? Can you buy something? You know, if they say you can't smoke anymore, they can preclude you from buying items. The control side of digital currency and governments is very interesting. China, I know, is working on it for different reasons than the US is.
Yeah,
That's
thank you.
great,
Thank you so
great
much,
answer.
Stephen. Wonderful response and very relevant topic that you have picked today, unblocking the blockchain, as well as talking about the cryptocurrencies and also the digital currencies. We really gratefully appreciate
Dr. Hari, thank you. Great seeing you as always. Praveen,
and enlightening
Swami,
us in
thank you
this.
for the opportunity. If anybody has questions, feel free to email me or track me down online, and I'm available. But now I'm going to run to the airport. Thanks, guys.
Thank you. Wish you all the best.